Hello, it's Tuesday the 25th, I'm FX Blue, and this is the market brief. So the good news is that the vaccines have been confirmed as being effective against the Indian variant. This means, unless there's a change in the data in the next fortnight, the data will support plans to reopen the country completely. So, life after COVID, hey? What does that look like? Well, allegedly, a longer wait in the pub, that looks likely, as concerns continue over the ability of many hospitality venues to attract adequate staffing since reopening. For the wider economy, though, the priority will be post-Brexit trade deals. Of course, a trade deal with the US is the jewel in the crown, and they are making progress. But it already looks like the steel industry will be sacrificed to ensure that deal goes ahead. Meanwhile, sterling continues to gain traction as a feel-good factor is taking hold once again. Yesterday we touched 141.85 against the dollar, and we kick off this morning around 141.75. The chartists warn of resistance growing around 141.90 though, so any move higher would probably need to be driven by US inflation data, but a break higher could bring a medium-term target into play around 143.80. Keep an eye on that. We've heard a lot about the Biden bill stimulus package and the likely impact on inflation, but without any forward guidance or even the rudiments of any plan shared by the Fed, they're running the risk of driving financial market instability. The worry of an overheating economy is very different to asset market bubbles, as we've seen in housing, where prices are driven higher by easy access to cheap lending, and the stock market, where the dominance of tech giants may be masking issues further down the food chain. The biggest challenge facing the Fed is the timing of stimulus withdrawal, though. Too soon and the economy could overbalance, reversing all the good work stimulus has done so far, but too late and the US consumer may see household debt become unmanageable as interest rates begin to rise. So the Fed's current quandary is understandable, but the complete lack of forward guidance is still a genuine concern for the markets. Dollar weakness may have run its course for the time being. The dollar index saw another test to the support levels around 89.80, and that held up yesterday. Euro dollar, meanwhile, remains stuck in a range. But how much breakout pressure is building? And will the US inflation data, or indeed comment from the Fed, trigger some dollar buying? Yesterday we saw 122.30, and we open around that level once again this morning. Right, that's it from me. Hope you have a great day, and do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.